And now for something completely different.
Forget everything you've been told by others before. Get ready for the real deal, the full story. Real talk about money, markets, life. Now, it's The Real Investment Show with Lance Roberts. Presented by RIA Advisors.
And welcome to the show. This morning is, of course, Monday as we get ready to launch into the final week of the month of March. March Madness is on us. It's the end of the quarter. We've got first quarter earnings season coming up. Just lots of stuff going on. Of course, the big news over the weekend, and markets are pointing higher this morning, is that, and this is kind of the issue that I talked about over the last couple of weeks in the newsletter and in some of our daily commentary. It's this on again, off again with tariffs. Now coming out of the Trump administration over the weekend is like, well, maybe we're not going to institute all of the tariffs that we were supposed to have on Liberation Day. Of course, that's April the 2nd. So now we're pulling back some of the tariffs. So markets are rallying on that today. So again, the point about that is it's fine to have tariffs, right? There's nothing wrong with tariffs. It's just a tax. And other countries have tariffs on our products, so we're going to have a tariff on them. But just institute the tariffs so that the markets can come to grip with what that means for earnings, right? That's all this comes down to, as we've talked about before. As an investor, what am I looking at? I'm looking at the price I'm paying for a stock for the earnings it's generated and trying to make an estimate about what those earnings are going to be 12 months from now, 24 months from now. That's all I do as an investor, right? That's all anybody does. We're just buying stocks today in the expectation that we will have higher earnings tomorrow and that will translate to a higher stock price at some point in the future, right? We're just buying and selling ethereal pieces of paper hoping to make money at it at some point down the road. Well, the problem with tariffs is that if you keep coming in and changing the tariff dynamic, that's a cost on businesses, right? It's a tariff, it's tax. And the businesses are the ones that pay the tariff. So if you're going to impose a tariff on me, that's going to lower my profit margin, that's going to lower my earnings growth, and that's fine. As long as I can calculate for what that's going to look like 12 months from now, 24 months from now, what we talked about before, this on again, off again, makes it very, very difficult for investors to figure out what earnings are going to look like 12 months from now, right? Because I don't know whether or not there's a tariff or not. Anyway, that's my rant for this morning. It just makes it very hard to project, right? So, I mean, everything we're working with, we're trying to incorporate these tariffs into our analysis, but we can't because, well, it's on again, off again, on again, off again. So just pick a damn tariff and stay with it and just let's get on with things, right? Just, it's not that complicated. But anyway, I'm sure he's getting a lot of pressure from people over tariffs, and so he's trying to, make a little bit of everybody some happy, right? So, outside of that, not a tremendous amount of economic data this week. We're going to kick off a lot the next week. Coming back next week, we'll have the employment report and some other stuff that we'll have another inflation report, et cetera, coming. But the big thing getting into the end of this week is just going to be the preparation for end of quarter rebalancing. Now, one thing about this recent sell-off in the markets, and we'll talk about the markets here in just a second, is that there's a lot of investors that are now underweight equities, right? They were selling into the rally. They've sold recently here near the lows. And so they're now underweight equities. And so going into the end of the quarter, I've got to get my target weights back up to the balances of where they should be. As a good example, on Thursday of last week, we rebalanced our entire dividend equity growth model to take advantage of this recent dip. So that portfolio is now back up to weight. There's going to be a lot of portfolio managers that have to do that going into the end of this week. So there's going to be some buying. Now, we got through the options expiration intact on Friday, so that was good news. I've had about a $4.7 trillion options expiration on Friday. That was a lot of volatility on Friday, but we did see some buying coming in at the end of the day. With this rebalancing going into the end of the month, that's going to provide an additional bid for stock prices here over the course of this week. So again, we may see some buying coming in here. Again, there's a lot of hedge funds, mutual funds, pensions, et cetera, that are now underweight equities in their portfolio, and they're going to potentially need to add that exposure there. So again, just that's one of the big things this week. And of course, next week, we're going to starting to focus on earnings But the detraction from the markets over the course of the next couple of weeks in particular is going to be the lack of corporate buybacks. We're now fully into the blackout window for corporate buybacks. That does remove a buyer from the markets. So again, it'll take about 2 weeks when we get into mid-April. Really the third week of April more than anything else, that's when buybacks, that window will start to open and we'll start to see buybacks coming back into the market. So again, could still be a little bit bumpy here for the next couple of weeks, but we'll see how that goes. Okay, here's what you need to know before the bell this morning. As we talked about in the newsletter this weekend, the big question from everybody right now is the correction over? And the answer is nobody knows. However, there's some things that we can look at that suggest that yes, we may be through at least the worst of the correction that we've had over the last 3 weeks, which has been pretty vicious. I mean, this has been a very, very sharp decline, 10% peak to trough, in just the course of about 3 weeks. Normally, if we go back to like summer before last, we had a 10% correction, and it took about 3 months to get through that. I mean, it was just kind of a grind lower, and we kind of kept bouncing on the way down as we were going through that correction. This was much faster, just basically 3 weeks, peak to trough, had a lot of selling come into the markets. Part of that had to do with the decline in the dollar. We had a lot of foreign assets in the U.S. equity, so when the dollar declined, at the same time that equities were declining, that caused foreign investors to pull their flows out and move them into foreign stocks because they were getting hit twice. They were getting hit by the decline in the equities and the decline in the currency. So their losses were actually much more significant than a U.S. investor just in the market. So it makes complete sense that they would withdraw money from here, put it back into European stocks, and particularly since those were holding up better, that those flows from the U.S. into Europe is what caused that rally in emerging markets and international. So the one thing to watch here is if we start to see a reversal in the dollar, we will also start to see foreign inflows back into the U.S. as well. But having said that, a couple of things, as I said, there's a couple of kind of things happening that suggest that we may be nearer a short-term low than not. First of all, the momentum signal is about to trigger a buy signal. If we get a rally today, right now futures are pointing higher over this kind of pullback in tariffs. So again, if that triggers a MACD buy signal here on the momentum basis, that will suggest that momentum's starting to come back into the markets. Relative strength has turned up as well from lows. That's also kind of a good indicator, starting to see some buying coming back into the markets. But speaking of buying in particular, money flows have turned positive. So again, as I've told you before, the one thing to really kind of watch is just pay attention to money flows. That's this shaded area in the background on this chart I'm showing. If you're driving, don't worry about it. You can watch our show later when you get to a place you can sit down and watch our YouTube show. But money flows, whether they're positive or negative, certainly makes just logical sense, right? If I've got money coming out of the market, stock prices are going to decline. If money's going into the market, stock prices are going to rise. So whenever there's a kind of a negative decline in money flow, markets are typically declining in that process. Well, money flows have declined. They got fairly negative during that sell-off in the markets. They've now kind of bottomed, turned up, and then went positive on Friday. So we're starting to see the early signs here of money flows starting to come back into the markets. That's also indicative that we may have had a short-term bottom. Again, nothing's guaranteed, and nothing, you should never take anybody's like, oh yeah, the market's about to take off and rally to the moon. Just be cautious, be careful here. That's all we're saying. But there are some indications that bottom may be in. And historically, 10% corrections tend to be fairly short-lived. They're normal occurrences, as we've talked about before, happen every year. And then we recover from this and at least get a rally. Now, where the rally goes to next, what happens next, that's something we're just going to have to work through together as we get there. But this is probably not the time to be selling. Again, this is probably the time to start looking to rebalance your portfolio as well. Look to pick up some opportunistic positions that you've been looking at. Trim stuff that's not working, raise a little bit of cash, certainly wouldn't hurt here. But just manage your portfolio and your risk accordingly. That's all in the newsletter this weekend as well at the website, realinvestmentadvice.com. But that's what you need to know before the bell this morning. We'll come back and we'll talk about the markets. Don't go away.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
The Social Security Fairness Act dropped elements that reduced Social Security payments, retroactive to last year.
What are you going to do with all that extra income?
Our next Candid Coffee offers savvy Social Security planning if you were dinged by windfall and pension offsets.
Saturday, March 29th.
Richard Rosso and Danny Ratliff answer your questions about Social Security benefits and what the removal of WEP and GPO means for your retirement. Candid Coffee with Ratliff and Rosso. Register today at realinvestmentadvice.com.
Attention Chevron employees and anyone else receiving or considering a company severance package. We know the process can be intimidating. What should you know to maximize your payout? Lump sum or pension annuity, retirement plan rollover or not? What about tax timing your severance? The fiduciary advisors at RIA Advisors can help you make the best decisions for your situation. Call us today at 855-742-7526. That's 855-742-PLAN. Or online at realinvestmentadvice.com.
The Real Investment Show.
RIA Advisors Research is the envy of the industry. Our economic insights are featured on advisorperspectives.com, Fox Business, and MarketWatch. RIA provides advisors with marketing and back office support, objective research, and holistic, cutting-edge financial planning tools to meet your clients' needs. Want to join a winning team and be part of a fiduciary culture where you can do your best work? Then why haven't you contacted us yet? Go to our confidential advisor hub at realinvestmentadvice.com. RIA Advisors. Big enough where it matters, agile enough when it counts.
And now, another page from the Real Investment Advisors Investing Manifesto. Manage risk and volatility rather than trying to manage gains. You don't have to be right all the time. Long-term investing success is a 70% gain. Let us help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
You're listening to The Real Investment Show.
And welcome back to the show this morning. So, just talking a little bit more about, kind of just the markets itself. And again, just, this correction as of late has been certainly very swift. It's been emotionally draining in a lot of cases, particularly if you had too much risk in your portfolio. You may have suffered a bigger decline than the actual market itself. And, that's always frustrating, right? But that's just part of the markets and part of investing. And this is the one thing we always have to remember is that, it's always fun when markets are going up. My best days are when markets are positive because I can just kind of look at the portfolio, everything's doing fine, it's doing what it's supposed to do, and I can go, do something else, right? It's just so, I can write, I can research, I can do whatever I want to do. It's okay. When markets are declining, it weighs on me, just like it weighs on everybody else, because I'm looking at positions and, I'm trying to, figure out what's happening. And, I don't like when markets go down, nor does anybody else, because I'm competitive. So I want the portfolio to perform well. And that's just a function of my competitive nature. So when things aren't working well in the markets, you go through these corrections, it certainly weighs on you emotionally. And that's where we often make our biggest investment mistakes, because this is where we start figuring out, well, we've got to do something, right? We have to do something. And sometimes the best thing to do is to do nothing. And that's hard. Doing nothing is really, really difficult when it comes to managing a portfolio, because it's just when things are declining, you feel like you have to do something. When markets are going up, we never feel like we have to do anything other than, wow, I missed that stock. Maybe I should buy this stock that's up already like 100% in the last week. Maybe I should buy that one, right? We do that kind of stupid stuff. But when markets are, but generally when markets are going up, we're out playing golf, we're doing whatever we're doing. We're not worried about it. It's like, oh, my portfolio's up today. Great. Okay, I'm gonna go do something else, right? Like I said, it's easy. But when markets decline, that's when we feel like we have to do something, right? It's like, well, I can't just sit here and do nothing. I can't just sit on my hands. But that's the difficult part about investing, is that if you've done your homework and if you've built your portfolio right, you have to expect markets to decline every now and then. That's just going to happen. That's a function of the markets. That's just a function of what goes up must come down eventually. And so the difficult part is to stand by and do nothing if you've done your work, right? Where we tend to get ourselves in trouble is that we haven't done our homework and all of a sudden we have something completely falling out of bed, and then we start trying to re-rationalize all of the reasons why we bought such a position, right? So let's just pick on Tesla for a moment. It's a great example of what's going on. Stock's down 50% from the peak, much more than the overall market. Much more than 5 times that of the market right now, right? Market's down 10, it's down 50. So if you're long Tesla, you certainly have to be really rethinking, why do you own Tesla right now? What's going on with it? Has anything fundamentally changed? Now, and by the way, just let me be clear. I'm using that as an example because it's a very prominent stock and it's got a very high following. Everybody knows it, right? This isn't an argument to buy or sell Tesla. That's not my point about this. We're talking about psychology. So, have you done your work in Tesla? Now, if you just bought the stock because it's going up and that's the only reason you bought it, then maybe you shouldn't own Tesla. If you've done the homework and you can make a case for why the stock is a fundamentally fairly valued company, its prospects are growing, its revenue trends are going to remain positive, its delivery of products, goods, or services to the markets are there, it has a wide moat barrier to entry, its competition, it's not losing market share to other competitors. If you've done that work and you can make the case for why this stock is now undervalued, well, you go buy Tesla. Just disclosure, we don't own Tesla, right? So I'm not, that's why I'm saying I'm not making a case to buy or sell. We're just using this as an example. So don't run out and say, well, Lance said. No, Lance did not say buy Tesla. I'm not saying not buy Tesla either. We're using this as a base case. So don't take this either way, especially you people in the chat. Y'all are the worst. I'm just teasing. But the markets give you opportunities to either fix a problem or to take advantage of others' mistakes. And this is the way we always have to look at corrections is the market really trying to tell us something? Has something fundamentally changed with the markets? Or is this just a correction where we get to take advantage of other people's mistakes? In other words, they're selling, I want to be a buyer. Because remember, as investors, our job is to buy low. Well, we can't buy low if we're panic selling along with everybody else. We've got to buy low when everybody else is panic selling, and kind of the old Rothschild statements. You have to buy when there's blood in the streets. Now, there's not blood in the streets, right? This was a 10% correction, right? That's just normal. But that's the point, right? It's like buying when everybody else is selling is a really difficult thing to do because our own emotions are generally telling us that we want to sell, not buy. Why would I buy here? The markets are going down. I was just a good example of this, right? I was posting a couple of tweets last week talking about really oversold conditions, super negative sentiment, and that we're probably close to a bottom. And I'd mentioned in there that we had been buying some positions here and there. It's like, and it was amazing the number of responses that I got back. It's like, oh, you're trying to catch a falling knife. This market's correcting. Don't you know that the world has just ended? Whatever, right? And maybe they're right. Maybe this is just a falling knife. Maybe we're going to have a bounce here and then go 20% lower. Maybe, right? But it's certainly possible. I'm not saying that it isn't possible. But if we take a look at all the technicals, right? We take a look at price momentum. We take a look at deviations from means and those type of things. In fact, I've got a whole article coming out on this tomorrow, along with some investing rules from Gerald Loeb. It's going to be a really good piece. You'll like it. It'll be on the website in the morning, realinvestmentadvice.com. But, when you look at what's happening in the markets, it's difficult to make the case right now that the markets are going to go dramatically lower from here. Now, it doesn't mean they can't. But they're probably not going to go dramatically lower without a decent bounce first because of where we are as well. Now, when we get this bounce, whatever it is, then we can certainly rethink our positioning, take some profits on the rally, et cetera. You know, if things are continuing to deteriorate, maybe we start really kind of reducing risk. Or if this market just takes off to new highs, keeps going, that's a possibility too. I'm not saying, and again, not saying that's the case either. And this is the problem with the media in general, which is, you know, when markets are going up, they're just going to go up forever. When markets are going down, the media headlines is they're going to go down forever. And this is where we've got to step back as investors and go, okay, put all that nonsense aside. What's going on with the markets? How do I need to navigate my ship in this particular piece of ocean where I'm at? You know, we're in the midst of a squall right now, right? So 10% decline. We got you know, high seas and, you know, high winds. It's just, you know, crazy right now, right? Very difficult to navigate. But this is where we go back to our instruments, just like any good captain, right? Go, you know, where's our GPS? Where's our destination? You know, all these type of things. We've got all these instruments to work with. It's not like we're out there with a sextant, you know, looking at stars and moon, like, oh my gosh, it's really cloudy tonight. I can't see anything. I'm completely lost at sea, right? We're not doing that anymore, right? We've graduated beyond that. We have all these tools and analysis to use now. And so we just need to you know, go back to using the instruments. And that's where investors typically get lost. Is they get lost to the panic, right? That first emotional behavioral shift that we get is to move towards loss avoidance. And loss avoidance is where we just want to mitigate any further losses. So we start taking action to mitigate loss. But that generally, that fear of loss avoidance, where does that occur? Not at the beginning of a correction. Right? It happens at the end of a correction, generally, for investors. Because it's where they've just, the decline has become too much. They can't afford to lose any more. So I got to get out. That's generally at the bottom of a correction. When should we have loss avoidance? We should be having loss avoidance at the peaks of markets. When everybody's optimistic, when everybody's happy, when everybody's talking about, you know, S&P 10,000. That's when you take some profits. So just, again, I know we talk a lot about this on the show, but you know, it's just so incredibly important for our own consciousness, right? And our own ability to, and you're all trying to manage your own money. You're all trying to make money with your portfolios. You're all trying to grow money towards your wealth. And we just keep falling trap to the same things over and over again. We chase assets to the moon. We just expect them to keep going higher, and eventually they're going to correct, right? All right, come back. We'll pick up more with the Real Investment Show. Don't go away.
The Real Investment Advice blog. It's required reading for the informed investor. Catch it today at realinvestmentadvice.com.
The Social Security Fairness Act dropped elements that reduced Social Security payments, retroactive to last year.
What are you going to do with all that extra income?
Our next Candid Coffee offers savvy Social Security planning if you were dinged by windfall and pension offsets.
Saturday, March 29th.
Richard Rosso and Danny Ratliff answer your questions about Social Security benefits and what what the removal of WEP and GPO means for your retirement. Candid Coffee with Ratliff and Rosso. Register today at realinvestmentadvice.com.
Attention Chevron employees and anyone else receiving or considering a company severance package. We know the process can be intimidating. What should you know to maximize your payout? Lump sum or pension annuity, retirement plan rollover or not? What about tax timing your severance? The fiduciary advisors at RIA Advisors can help you make the best decisions for your situation. Call us today at 855-742-7526. That's 855-742-PLAN. Or online at realinvestmentadvice.com.
The Real Investment Show.
Are you a financial advisor sneaking peeks at our stuff? Instead of trying to do it all yourself, why not just join the team at RIA Advisors? Our full-service organization can provide you with the support, unparalleled research, and tools for managing your clients' money and honoring the fiduciary pledge of putting clients' best interests first. Don't take our word for it. Talk to the advisors that work with us. Want to come win with us? Go to our confidential advisor hub at realinvestmentadvice.com. RIA Advisors, big enough where it matters, agile enough when it counts.
Can't catch the whole show now? Listen to our podcast later at realinvestmentadvice.com.
By the way, I'm very disappointed in you and Richard, both.
I can't
very
wait to hear
disappointed.
why.
Because I was online yesterday and got an ad that popped up. And it's for a new book that's just come out. It's called I'm Sorry I'm Dead. That's the name of it.
The Real Investment Show podcast.
You know, so when you pass away, all the people you need to contact. And, we told our kids that when my wife and I pass away, we want them to cremate us and then take us to Italy and dump us in the ocean in Italy.
At realinvestmentadvice.com.
Knowing my kids, I don't trust them. So I may have to have a third party kind of make sure we get to where we're supposed to be.
A trustee of ashes?
Exactly. We got them as far as Galveston.
And now, another page from the Real Investment Advisors Investing Manifesto. Bulls win in bull markets. Bears win in bear markets. Eagles soar above and take advantage of opportunity. Let us help you soar as you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
If you're working and looking to retire soon, a Medicare special enrollment period is in your future. Understanding Medicare choices, enrollment deadlines, and costs are essential to your overall standard of living in retirement. The wrong choices can cost you thousands in penalties. Make sense of Medicare's alphabet soup with RIA Advisors' online resources and one-on-one partners to help secure the healthcare insurance choice that is right for your lifestyle and budget and avoid gaps in coverage. Click on the insurance tab at realinvestmentadvice.com today. realinvestmentadvice.com.
You're listening to The Real Investment Show.
So I've told you before that Brent posts little things on my notes screen every morning. And it's always interesting because sometimes he just happens to hit on a topic that I actually have data to back up. And one of it was this morning. There was a very interesting, there's a kind of a chart service out called The Daily Shot. If you've never looked at it before, it's interesting. I mean, if you're a chart geek like me, all it is that every day they put out a little, like, I guess you call it a newsletter. I'm not sure what you call it, but it's just a series of charts is all it is. Just charts on this, charts on that, charts on technicals, international markets, whatever. So, if you're a chart geek like me, the Daily Shot is interesting. It used to be, it got spun off from the Wall Street Journal a while back, and it's now independent. But anyway, this morning they had this chart out. I'm trying to find it. Here it is. Brent, let me see if I can get this for you here real quick. There's two pieces to this, but if you can just grab this first chart. So what it's talking about is it's talking about the more the merrier. United States straight adults aged 25 to 35. And the question is have you had sex within the last whatever period of time? Now, we've talked about, and the reason this is interesting is because this goes into this tweet that Brent gave me this morning. But it's interesting because of the people they surveyed between 25 to 35, 30%, nearly 30% of them have not had sex in the past 3 months. 20% have not had sex in the past year, and 10% have had sex ever, right? My daughter better be one of them. That's all I'm saying. Let me live in my dream, please. But anyway, this has a huge implication for the U.S. economy. We've talked about the importance of demographics before, and interestingly enough, I mean, there's a subsequent chart to this. It was the average sex frequency in the past month between 2002 and 2023. People with a graduate degree and people with college degrees have less sex than people with high school and less than high school graduation. Probably because they're working. I don't know the reason for it. It's just an interesting stat. The point is that demographics are a huge issue for the United States. And I'm gonna one more chart for you, Brent. And the rate of birth in the United States is plunging since 2000. And we've talked about this before. There's a lot of reasons for this. Part of it is societal, right? Part of it is the cost of living, right? People are just going, I can't afford, to be married and have kids because I'm barely making ends meet as an individual. But the rate of decline of births just since 2000, and really you can almost mark this to the year at 2007. We had about 4.3 million births per year in 2007. We're now down to 3.6, which is the same level we were back in 1980 with a much smaller population. What happened in 2007? Anybody? Bueller? Facebook. Social media. This is where social media took off. It started with Facebook, then it was Tinder, it was Bumble, it was, Instagram and TikTok, etc. And again, I'm not saying that, social media is for the demise of births. It certainly, isn't the only singular cause. Again, the cost of living, the ability to meet other people in general has become much more difficult, right? The whole societal structure, right? This bipartisan divide. I mean, there's people who's like, well, I won't date him because he's Republican, or I won't date her because she's a Democrat. We've had all these influences now infiltrate our lives because of media in general. That is all, leading to this decline in the natural process of civilization. Why is this all important? Again, demographics are hugely important to the growth rate of your economy and where you're going. But anyway, Brent sent me this tweet this morning, and it's a Facebook post. It says, there's a young lady. She's going, tell me a little about yourself, right? And this is what we've gotten to in terms of dating, right? It's just, we're doing this on Facebook. We're sending messages to strangers. Don't get into a stranger's car. Oh, we do that with Uber. Don't take candy from strangers. Okay, whatever. I'm just going to meet random people on the internet that I have never seen before. And she goes, well, tell me a little about yourself. He replies, I don't drink, I don't smoke, I don't hang out with women. I go to bed at 2200. I get up at 600, quiet and calm. She says, oh, you are absolutely perfect for me. He says, of course, when I get out of prison, everything's going to change. So, this is the problem. You don't know who you're talking to on the other side of this. But seriously, going back to, the importance of demographics, this decline in the birth rate that has happened over the last 20 years seems to be remarkable, but it's not remarkable in nature. Japan's going through the very same issue. When you have an economy that is failing to generate economic prosperity across the entire population, and you have more and more of the wealth obtained by the top 10 to 15% of the economy, everybody else is struggling to make ends meet, it's very hard. In Japan, kids are living with parents for extremely long periods of time. They're not going out to form relationships because they can't support a relationship. They don't have a job. They don't have the ability to get work in some cases. And so they don't want to go out and get into a relationship that they can't support. So they're just living at home with parents. And the rise of multi-generational families is something that's occurring right here in the United States as well, either by choice or by force, because it's just hard to get out there. And again, we hear a lot of these stories, right? I talk to a lot of people, and part of it has to do with expectations. Well, and parents are also part of this problem as well, because they're enabling. It's like, sure, come home and live with me till you get on your feet, right? So they graduate college and they go home to live with their parents, and that's fine, except now they're confined. Their whole job search is confined to the area that they live with their parents. Well, I'm living with my parents. I've got to get a job so I can get on my feet. And then once I get on my feet, I can get moved out. But my whole job search radius has to be within the range of my parents' household. So parents are thinking they're helping their kids by helping them, support them, et cetera, while they're trying to find a job and get on their feet. But they've locked them into a very, very small area of their search radius. Instead of graduating college and going on a nationwide search to find a job somewhere that will allow me to get an apartment and do what I need to do to get up on my feet and go, right? So part of it's parents' problem. Part of it's child's problem. Child's problem has expectations of, I need to buy a house. No, you don't. Right? And see, this is something that the media has wrapped people into, is like, oh, you have to own a house. It's the American dream. We've talked about this nonsense before. It's not the American dream. The American dream isn't home ownership. American dream is being financially successful enough to be able to afford a piece of real estate. That's your marker that you've made, that you've obtained the American dream. The American dream is going out and building a business and building wealth for yourself. That's the American dream. That's what capitalism provides you, is that opportunity. And whether you take advantage of it or not, that's up to you. But the ability to buy real estate is a function of the achievement of that wealth building process. It's not, here, buy a house with 3% down that you can't afford. Right? That's what we told people, though. Oh, you've got to own a house. No, you don't. Look, my kids are prime examples, and we have this conversation a lot in our household. Every time they come home, like we just went on spring break. During the spring break, we had this same conversation. When you get a job, this is what you got to do. You're not coming home. Don't plan on coming back to the house. If you want to come home for you graduate college, you want to come home for the summer, cool your jets a little bit after graduation. Okay, I'm fine with that, but you got to get out after that, right? You got to go. And so they've got to get on their feet. But, their expectations is what they see on the internet. Oh, well, I have to have a house. I was like, no, you don't. And your first apartment is going to be a piece of crap. It's going to be on a terrible side of town. It's going to be something that is absolutely miserable to live in, and that's okay. There's nothing wrong with that. You need a cheap apartment and a cheap car to get you back and forth to work. That's all you need, because you're going to be at work. You're not going to be hanging out at the house all day, right? So you just need a place to sleep and a car to drive to get you to work and back home so you can get on your feet. And then start making all the right decisions. Start working hard, putting in the extra time, do the things you've got to do to move yourself up in whatever company you go to work for, start making more money. Then you can start to look at nicer apartments. But the rent can't be more than 20% of your income. And see, and there's where the defining moment is once you put a cap on what rent can be, it brings down all the choices of where you have to live. But see, these are the tough things that we've got to go through. But again, when you're, going back to the demographic issue, the financial pressures, because we live beyond our means, because we can't afford in our minds to get out there and do the things that we need to do to build our wealth, we're also not building relationships with people. And that has consequences for the economy. All right. Be right back. Get ready to wrap up the show.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
The Social Security Fairness Act dropped elements that reduced Social Security payments, retroactive to last year.
What are you going to do with all that extra income?
Our next Candid Coffee offers savvy Social Security planning if you were dinged by windfall and pension offsets.
Saturday, March 29th.
Richard Rosso and Danny Ratliff answer your questions about Social Security benefits and what the removal of WEP and GPO means for your retirement. Candid Coffee with Ratliff and Rosso. Register today at realinvestmentadvice.com.
Attention Chevron employees and anyone else receiving or considering a company severance package. We know the process can be intimidating. What should you know to maximize your payout? Lump sum or pension annuity, retirement plan rollover or not? What about tax timing your severance? The fiduciary advisors at RIA Advisors can help you make the best decisions for your situation. Call us today at 855-742-7526. That's 855-742-PLAN. Or online at realinvestmentadvice.com.
The Real Investment Show.
RIA Advisors Research is the envy of the industry. Our economic insights are featured on advisorperspectives.com, Fox Business, and MarketWatch. RIA provides advisors with marketing and back office support, objective research, and holistic, cutting-edge financial planning tools to meet your clients' needs. Want to join a winning team and be part of a fiduciary culture where you can do your best work? Then why haven't you contacted us yet? Go to our confidential advisor hub at realinvestmentadvice.com. RIA Advisors. Big enough where it matters, agile enough when it counts.
And now, another page from the Real Investment Advisors Investing Manifesto. A passive investment portfolio requires active risk management. It's not a choice, it's necessity. Diversification doesn't protect against risk of loss. Let us actively help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
You're listening to The Real Investment Show.
You know, I can always depend on our YouTube chat to make me chuckle on the breaks. So if you ever want to laugh, just go read some of the YouTube chat. By the way, if you're not following us on YouTube, watching our YouTube channel, we appreciate it very much. Be sure and like and subscribe as always. Trying to grow our channel there as well, so we can make sure and keep bringing you information every day. But it does. There's this one comment remind me of a girl I dated once. So, you know, it's interesting when I talk about kind of the harsh realities of the world we live in and this kind of displacement of expectations versus just reality. You know, it is a different world today than I grew up in, for sure, absolutely. But people go, well, it's not affordable today. It's just as affordable today as it was when I first graduated college. Because you have to remember that when I first graduated college, my first job first full-time job I had was at a bank. My salary was $11,000 a year. Right? But I could afford a car, I could afford an apartment. It wasn't great, right? But I could get by. And so, yeah, things are a lot more expensive today, but the big difference between then and now is expectations. When I had my first job, I didn't have to have $1,000 cell phone. I didn't have to pay for, 15 different subscriptions for online streaming services. I didn't have to, my first car was a B2200 Mazda pickup truck. It was a piece of crap, right? Standard shift, plastic seats, AM radio. That's all it had. But it got me to the bank and back. That's its whole job, right? Like we were talking about. And so, things weren't great. And then, right, I came to Houston because I wanted to start a business. And I had no idea what I was doing, right? I was young. So, started to build a business. And I could not afford anything because I was making no income whatsoever. I mean, I was working part-time gigs. I was doing everything I could while I was trying to build my business, but I had no money and lived out of my truck for 3 years to build my business. So, and that was, early 90s. Actually, mid-90s. But the point is that, yes, things have changed and things are certainly more expensive. Yes, housing prices are more expensive, apartments are more expensive, but yes, that's inflation. And salaries are a lot, starting wages today are a lot higher than they were back in the 80s. So, a lot of this comes down to the choices that we make. And it was interesting is one guy posted, well, the American dream is to make enough money so you can leave America. You have obviously never lived in another country. My son's learning this living in the UK right now, right? It all sounds great on surface, right? Go try to, you cannot achieve the rate of capitalism in any other country that you can build in America. You just have to, and we've talked about this before, you just have to be willing to step out there and take the risk. You've got to, if you want to build wealth in America, or if you want to build wealth, period, America is the best place to do it. You just have to be willing to put in the time and the effort and take the risk. And there's a huge risk of failure. 80% of all small businesses fail within the first 3 years. And the reason they fail is because of two reasons. One, either lack of capital, insufficient capital to start with. That's an easy fix, right? You go out and get investors. The other is, and the bigger of those two reasons is that people try to live beyond what the business can generate. In other words, they start a business day one and they start paying themselves $100,000 a year in salary because they have bills to pay, right? And the business just can't afford it. And so they go out of business. But that's why those two reasons are why 80% of small businesses fail. But if you can do what is necessary, start a business doing whatever it is, whatever you do, right? Anybody can start a small business. Brent is one of the best Texas Radio Hall of Fame, right? You want to know anything about radio, this guy knows it. He could start his own consulting gig anytime he wanted, right? Just, because he's got knowledge. And if you have knowledge of something, right, whether it's woodcraft or, engineering, whatever it is, you can start a business and you can build a business off of it. But you've got to get out there. You got to hustle. You got to make sales. You got to create customers. And you're going to live hand to mouth for a year or two or three. And it's going to be tough. And it's going to be 80 to 100 hours a week. I still work 80 hours a week, if not more. And if you don't believe me, just ask anybody in my office. But that's just what it takes. And if you want to build a successful business, you've got to put in the time and the effort and the discipline to do it. But you can do it. Anybody can do it. It's just hard. Because if it wasn't hard, everybody would do it. And then you really wouldn't have the ability to create success. It's the rarity that creates the success. So, it's just, there's always these arguments, with people that, they're like, well, I hear what you're saying, but, right? There's really no but to it. This time isn't different. This time isn't any different than it was previously. Things are different, absolutely. And we have to make different choices because of things are different. But we have expectations. See, this really comes down to the fact that we have expectations that are far above reality. I'll give you a real quick example here. There's a great story, and I encourage you to go read this story about the guy that started the Savanna Bananas. And I may have told you this story before on the air, but I'm going to remind you anyway. Because I think this really is the heart of what we're talking about here. So the guy that started, if you don't know who the Savanna Bananas are, go look them up. It's a baseball team. And this guy had a vision. He says, I want to fix what's wrong with baseball. Because baseball's boring. But he wanted to create this baseball team. And when he started out, it was just kind of another kind of minor league baseball team. That's really kind of all it was. And so for 3 years, he sold 2 tickets in 3 years. I mean, nobody wanted to go see this baseball team. So finally, at his wit's end, he goes home to his wife, says, honey, I'm going to have to shut this down. And she goes, is this your dream? He's like, yes, it really is, but it's just not working. And she goes, here's what we're going to do. She goes, we're selling the house. We're going to sell the cars. We're selling everything. And we're going to move to the worst side of town. And we're going to buy a little bitty crappy apartment. And you've got 2 years to figure this out. And that's what they did. So he started studying Disney. He's like, why is it that people who can't afford to go to Disney go to Disney? Right? What's the attraction? So he figured out what Disney did to keep customers coming back to Disney over and over and over again. And he started implementing those processes into his idea for baseball. That's why you got a guy on stilts that goes out and pitches, right? You got umpires that do backflips. Got all these crazy rules. If you hit a foul ball and it gets caught in the audience, you're out, right? But what he came back to was he fixed all the stuff about baseball that makes baseball boring. He made it, for lack of a better term, the greatest show on earth, right? Barnum and Bailey. And he has, all the players, they go out and they dance on the field. It's entertainment, and the thing moves very quickly. I think the longest game's like an hour and a half, maybe. But here it is, a few years later, and he sold out Madison Square Garden. Very successful now. That would have never happened had his wife not said, "Hey, you know what? We're going to sell everything. We're going to move into a crappy apartment. We're going to start over, and you're going to make this work." And you got 2 years to do it. Sometimes we need the motivation, right? We need to put a clock on ourselves. But the other side of the coin is that you also can't quit when things get tough. And the problem for most small businesses, one of the big reasons that we talked about with why so many small business fail is they run out of money. But it really isn't that as much as they run into difficulty and they quit. Well, it didn't work, right? I'm going to go back working my job, whatever it was. Sometimes you got to push through whatever that barrier is, and you got to make those really, really tough decisions. And so, and that's the hard part, right? And if you're married trying to start a small business, you need to make sure for certain that your spouse is on the same page with you, because it affects them as much as it affects you and everybody else. But it can be done. And there's the stories about people who have started with nothing and built massive amounts of wealth are abundant. You just go look on the internet. The stories are amazing of people. Paul Mitchell. But you can do it. But you just have to commit to the process of doing it. It's the same thing with investing in your portfolio. Sometimes it gets tough. You just have to commit to the process, even when you don't want to. All right, wraps up the show for today. Be back tomorrow. Pick up John Penn. See you then.